Okay, you're good.
We're ready to roll here today, and hot markets in the that we're seeing today with corn, beans, wheat all making new contract highs. What's the specific story behind it? I mean, I think it's a combination of things. When you get some firmer cash basis levels, that's offering its support, and then you also have dry weather in Brazil to give the second corn crop down there some uncertainty, and that's rallying corn futures. And then bottom line here in the U.S. is it's cold, and there's many areas of the Midwest that are getting their mid-April or end of April snowfall in here. So, I mean, you just kind of add that all up, and with the momentum being higher, that was kind of enough to push us into new highs in here right now. I just brought up a Dees 21 corn chart. I don't have a lot new to show you here, but we've just had a tremendous rally since that end of March stocks and acreage report with Dees corn futures adding 50, 60 cents a bushel. Are we going to get a lot more follow through in here or not? I mean, that's kind of the $1 million question. I guess for me, sitting in here on April 20th, if we're willing to add some weather premium because of cool temperatures right now, you have to wonder if we'll take a little bit away, once we start warming up as the calendar flips over to May. So that's one thing, I guess, that's in the back of my mind in here right now. But in the near term, you do have to respect the trend. The same things happened in beans. We finally pushed above $13 today. I thought it could have occurred right after that March acreage report, and that didn't happen. We're finally seeing that now. And again, it's rallying the same reasons with corn. I guess the one thing, though, that sticks out to me, though, on beans is when we start looking at weather. If we would have followed weather along in Brazil all year, you would swear they would have had a poor crop. I mean, it was too wet and too dry, okay, too hot, too cold. It seems like you threw everything at it. And yet, when the year was all said and done with, Brazil raised a record bean crop. And so, I just kind of question right now how much of this weather premium really needs to be in place. It's probably more of a demand base where we're finding the support there. If I'm going to get over to the one true weather market, I believe it's September Minneapolis wheat, as it made new contract highs last week and getting follow through in here right now because of the dry weather through the northern plains and the Canadian prairie. I think that's, if we've got a real weather market in here right now, I think it's September Minneapolis wheat that would lead us. The market that, and I didn't put this chart up here, and I probably should have, or I'll remember next time, that surprises me that's lagged behind is oats. Oats hasn't made new contract highs yet, and I just would have thought if spring wheat would have went up and with the corn rallying the way it is, that this oat market would have had a little more gas to the tank, and that's not the case. Whenever we start making new highs in the market, I think it's always important to go back to a continuous chart and take a long-term look back and say, okay, where can we really run to? Here's a December corn continuous chart, and that red line I have on there is at 510. That was about the high in 2014. I think when you take a step back on here, when you look at this market, we're going to need something special to occur to get a sustained move above the 5.25 or 550 area. Okay, I know we're at 530 in here right now, but when you're moving this much, you kind of got to have some round numbers to look at. And you go back to 2011 or the rally in 2012, it was really, all of a sudden you get about $556. It was go time. Somewhere in here, I think in this 5.25 to 550 area, that if we're gonna move higher from here, get that next leg up, we need to have more of a weather issue than what we're sitting at here today. Again, that's just kind of my read with this Dees corn contract. When I get over to new crop November soybeans and look at a continuous chart, here I'm at $13. I've had this chart up here a number of times this past winter. Okay, I'm one where I think on beans you can add some weather premium, $13.50. You can maybe even argue $14. But to get above $14 in here, we probably need to have a major weather issue here in the U.S., okay? That doesn't seem to be in the cards right now. And the way I see it today, and this is just on April 20th, is that this market built up some weather premium because of the cold temperatures, because of the snow in the forecast. And I know this is just my backyard, but our current weather forecast, we got a chance of snow flurries tonight and tomorrow. And then a week from now, we're going to be close to 70 degrees. So, I mean, if we're trading cold weather today, that's going to change in here as we move ahead. If I'm going to go back to years where I'm going to compare things to, to me, 2021 right now is just almost like 2014 on the corn market in the spring of the year. In 2014, we're coming off some tight stock levels, following the drought of 12 and in 2013 as well. And here in the spring of the year, we had corn sitting around $5, give or take. Okay. We moved into the mid-May timeframe and June timeframe. We had a good crop. Okay, prices started rolling lower, and it was basically a downtrend throughout the entire year. Okay, I don't know what this crop is going to be like here in 2021, but just like in 2014, what I heard often in the spring timeframe was, boy, if we have some crop issues here, we could go back to those 2012 highs and see $7 or $8 corn. I'm not going to disagree with it today. I didn't disagree with it back then. But on the same token, we have to look, well, if we raise a crop, we can also roll this thing down. So I believe when you look at corn and call it 5 1/4, give or take, okay, and we'll be in a wide 50-cent trading range as we move ahead the next month, we get to mid-May, we're going to either accelerate higher, okay, on some issues, or this thing is probably going to roll down if the crop gets planted, okay? I mean, there's other things we need to consider, but that time is coming up where we are going to get a breakout. When I get to the bean side of it, I mean, the chart looks fairly similar in here. Okay, beans peaked out in mid-May and then rolled sharply lower when we got to the end of June and the July timeframe. And again, like with corn, we're sitting here and saying if we've got crop issues, we could see $17 or $18 soybeans. Okay, without crop issues, beans went below $9.50 by harvest. Now, the one thing that really sticks out to me about 2014 and what we've got to go back and recognize is that bean carryout, or the bean carryout in 2013-14 marketing year, okay, was only 100 million bushels. And where this bean market broke a lot in the summertime frame is we actually got imports in from Brazil, okay? So not only did we have a good crop growing here in the U.S., we had South American beans making their way into the U.S., into Southeast U.S. This is where I think this is an important chart to look at here. And what I've got in front of us is the difference between U.S. and Brazilian soybeans over the last 3 months. And you can see in mid-February, okay, Brazil beans were at a 48-cent discount to U.S. offers at the port. And if you go back to February timeframe, our exports started declining substantially because Brazil was offering beans substantially cheaper. Okay, we got to mid-March, and Brazilian beans peaked out at that time at a $1.10 discount to U.S. beans. And I know we did a webinar at that time saying, boy, we're getting to a level right now where it's close to making economic sense to import Brazilian beans into the U.S. We just think it needs to be somewhere in that, well, freight rates have jumped up. We kind of went with $1 to $1.20. Okay, it's probably more like that $1.10 to $1.30 area. So if that spread would have gotten wider, we could have seen some Brazilian beans making their way into the U.S. Now, though, in mid-April, that spread has narrowed back up. We're still not going to get any export business as Brazil beans are about 50 cents cheaper than U.S. offers, but there's really no threat of importing beans into the U.S. So when we take a step back and look at whether if it's soybeans or corn or wheat on the world market, the U.S. export pace is going to die off to next to nothing because U.S. grains are expensive on the world market, but they're not so expensive that we're going to be getting imports. And it was the imports of Brazilian beans back in 2014 that really kicked the market down hard. So this has changed a little bit in here right now, okay, compared to what we saw in the mid-March time frame. And this is the reason why we're not going to be getting beans imported into the U.S. in the near term. It just doesn't make economic sense. If you have some questions, feel free to type them in. Here's just some final thoughts. Over the winter months, and I think this goes back to our first webinar, we talked about volatility. It's here to stay. Outside markets, what has our attention today is lumber futures. Okay, lumber futures have rallied about 20%. in the last 6 traded sessions. You remember a month or so ago, we talked about GameStop and the volatility in Reddit users. It seems like the lumber market is a choice there. And, can that spread into some ag commodities? Sure, that can. When it comes down to making some cash sales, I think you've got price objectives and time objectives. We've held off on scaling in because the market's been hot. But as you can see, when we look back to 2014 or remind ourselves what seasonals are, we're at a time frame right now where we could be putting in a high, okay, depending on what kind of crop conditions we have. On the other hand, they could be putting in a high if we got some major issues. This thing could make that next leg up too. That's where budgeting dollars for options make sense. We ones where if we're getting coverage on beans, we really like using bean puts, holding the physical, especially once we get past that 40 to 50% sold, and just budget dollars for some puts. I think the last thing is you just got to really, expect the unexpected. Okay, this thing's going to be volatile. I got to tell you, I was surprised this morning when you got beans up 20 cents basically on cold weather. Okay, I think it's a little early to have this kind of volatility in the grain markets, but here we are. If you have any suggestions for our webinars or questions, like I said, drop us an email. We look forward to doing these things every week. Thanks a lot, and stay safe planting, and hope you get a lot done here in the next week. Thank you. 11 minutes.